Hello and welcome to our third quarter of 2012 Global Capital Flows presentation. My name is David Green-Morgan, Global Capital Markets Research Director at Jones Lang LaSalle, and today I will be presenting the results of our Q3 research and looking forward to the final quarter of 2012 and beyond. A note at the outset that all figures quoted in this presentation are in US dollars. Transactional volumes maintained their consistent performance in the third quarter, recording $100 billion, a small 6% drop on the second quarter of 2012 and a 7% drop on the same quarter last year. Year-to-date volumes are also 7% below the pace set in 2011. The $100 billion recorded this quarter is in line with the long-term quarterly average that shows that commercial property is well through the recovery phase of the cycle. The below-average performance we saw in the first quarter was certainly a case of investors taking a breather after a busy 2011. While all three regions saw a decline compared to last quarter, only Europe is behind year-to-date compared to 2011, which we expected at the beginning of the year. On an interregional basis, investors continue to look to Europe for buying opportunities. We have seen interregional flows into Europe increase by more than 60% year to date, with an increasing interest for continental European assets, as well as ongoing strong interest in the UK and London. The Americas and Asia Pacific have seen interregional investors pull money out of these two regions, although domestic capital is much stronger and quicker to deploy, making it harder for offshore investors to acquire assets. Over the last 4 years, we have seen global investors look away from the office sector and divert allocations towards retail and logistics in particular. However, that trend has reversed in 2012, with offices commanding half of all transactions so far this year. Retail has moved back to a quarter of all transactions, while industrial has stayed fairly stable. Hotel transactions are following the broader commercial market globally, with a 10% lag to their performance in 2011. Transactional hotel volumes in Asia have been particularly slow, with a lack of product on the market hampering buyers. With volumes in the third quarter coming in bang on the longer-term average of $100 billion, we have confirmed our year-end forecast of $400 billion, which is consistent with a 10% downside on 2011 we stated at the start of the year. For 2013, we see a similar picture emerging of approximately $100 billion a quarter, with the possibility of a significant upside if the global economy grows more strongly than anticipated. We are already seeing signs of activity in the Americas improving, with it set to outperform in 2013, while Europe and Asia Pacific look set to be more in line with this year's performance. The improving CMBS picture in the US and more modest improvement in Europe are encouraging, and the historically low cost of debt will eventually lead to more liquidity in areas outside of prime locations. Well, that's all from me, and I look forward to bringing you the Jones Lang LaSalle Global Capital Flows update next quarter.